Institute for giving this opportunity to share the thoughts and on the practice of the corporate turnaround, and wherein the professionals can develop their mindset as a turnaround professional. So I will share the my thoughts around it, that what are the skills required, what kind of mindset which you have to essentially develop. uh, Now, we are asked various questions, that we are already professionals, and now whether a chartered accountant or company secretary uh, or a management a professional, and working with, or uh, working with various just working with working with various corporate, assisting them, okay, helping them in various strategies. But what is important is that when we are dealing with the companies which are essentially in decline, how do we uh, assess the symptoms? How do we spot the signals? One, what kind of mindset is required at that point of time? Because when the company is doing well, when company is performing satisfactorily, or company is growing, so at that point, the point of time, there is a little thought on around how to really uh, see that that a decline is not happening, or the certain factors are ignored. So during that growth phase, or even the companies is doing well, so as a result, the company may not be able to focus on driving the profitability and meeting the commitment to various stakeholders. So, and the company falls into the you can say sort of the the chain, wherein then company finds it very, very difficult to come out that situation. So I'm talking of this kind of situation where we professionals essentially can help the companies by developing a right kind of the mindset. And what is that mindset that we are going to talk about? And thereafter, which will be followed by a case study. So the case study is though is of insolvency, but you can very well understand from the case study how a professional like you, by developing a higher level turnaround skill set, can maneuver that kind of turnaround. And so I will say that it is a self satisfaction when you achieve that kind of output. Okay, so I will. So the first of uh, all of us are familiar with the, how do we identify the distress signal. uh, the financial performance is going down, company is defaulting to various lenders, company is not depositing EPF, not paying salary. Recently you saw one of the airlines companies, I would not like to name, but these are the symptoms which are essentially demonstrated at that point of time when the company's financial performance is dying down and company is in a decline stage. So these are the first signals. The company does not pay its statutory dues, company does not pay salary on time, company does not deposit EPF or TDS, or does not pay its supplier or various other vendors on time. Disparate processes, lack of quality, that means unsatisfied customers. And so if there are unsatisfied customers, that shows the lack of quality, so the return would be higher, so the wastage would be much higher. Such kind of companies have very high employees attrition, uh, because when the company is into difficulties and salaries are not paid of time, then experts and companies valuable HR resources, they they leave the organization and company is bereft of the management expertise. When the company is to difficulty, most of the cash credit lines or lines with the lenders are cut off, or they are very, very restrictive. So as a result, the company finds it very difficult to get any new line and thus faces liquidity crisis. So these are all, and obviously when the company doesn't have funds and the key personal and professional leave, there will be non-compliances. So now, again, coming to the question which many professionals ask, that is it our job? Is this turnaround our job, or this is the job of the top management or the promoter or anyone who is appointed for that purpose? So turnaround basically is a skill, and that skill, as a professional, once we acquire that skill, as you will see uh, as we go along in this presentation and then subsequently the case study, you will find that by developing this kind of mindset, you can apply this skill set and mindset to any situation, any crisis situation, and as a result you can have improved outcomes. So most important aspect is we have to see how we got here and what it means. uh, so understanding the nature of decline, okay, that so that will require some historical data and analysis in terms of the sales, cost of goods sale, uh, major customers, the quality or technology. So that is what is the understanding the nature of decline. Now, what happens when such a situation arises? The firefighting is the most dramatic form of responding to a crisis. So, what happens that whenever such kind of crisis is there, so the immediate response is in terms of the ki bhai aag bujha do. In that particular spot, rather than looking at what is causing this fire. So, as we say that novices look at obvious features such as height of flame and color of flame, and veteran would see, uh, a veteran firefighter would see the clues that had told him where the fire had started, why it was further burning, and what they would likely to do next. So, unless we see the cause, the what which is causing the decline, okay, we cannot undertake the action. We One can take action for one day or a week, or during which one can take certain actions so the company can run further. However, what is important is the cause which is essentially causing this decline. And we are talking of decline, obviously we are talking with the bleeding. That means the company is losing money, and what are the major causes of that? So, okay, so uh, okay, so the next it is when we are in such kind of situation, or okay, we professional, we are in such kind of situation, how we can contribute. So it doesn't mean that so in every situation we will have the external turnaround professional to help us. We ourselves professionals can act as turnaround professionals by developing these skill set. So approach for turnaround is essentially adopt adopting various phases. Okay, uh, so it's a phase wise approach for efficient operations, and which can rectify the organization's challenges. So first is the identification phase. So work on comprehending the current state. That means, as I said, where are we currently? Okay, the now whether the sales going down, major customers leaving us, it is a technology problem or quality problem, uh, cost of production is high. So that is what is the comprehending the current state, and that will involve the understanding the organization. Sorry. Okay. Uh, so that will be the comprehending the current state. That is where we are, the structure of the organization, operational approach, and performance metrics as is process mapping. So we have to do as is where process mapping also. That is, if we continue with this kind of scenario, what is going to happen in say next 3 months? So that is the as is process. Next is analysis phase. Now this should focus on pinpointing inefficiencies in process, bottleneck, waste, and opportunities for cost reduction and performance improvement. So once identification phase is over, so you will come to know that which matrices are essentially red flagged, and that is what it will lead to: pinpointing inefficiencies in processes, bottlenecks, supply chain, waste, or the quality, and that will lead to essentially uh, 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 us the various measures which will require to be taken, okay, for cost reduction and performance improvement. So this identification and analysis phase is key to the development of strategy. That is where we come in the design phase, formulate a to-be process map. Okay. So first is we are talking of as is process. That means if we do not take any action, what will be the performance of the company in next 3 months? However, after analytical phase and what steps we devise, what will be that is the after undertaking the process, and so this is essentially to be process. So what actions are to be taken, and for this what is required is use industry best practices and modern manufacturing principles such as lean and six sigma. So this is essentially for an operating company, okay, uh, where the company is already operating. Uh, okay. However, I will come to where the company is closed, and how to uh, essentially deal with their such kind of situations also. So essentially, benchmarking the companies, the current companies' practices with the industry's best practices will help in understanding what are the steps to be taken for improving the performance. So we have based on the identification and as you see, analysis. Okay, so in the design phase we have identified, that is the identified to be process map, that is the steps which are required to be undertaken. Next is very important, which is the implementation or execution phase, where redesigned processes are rolled out. Okay, And whatever the strategy which has been worked out in the above step, those are executed with the assistance, with the by involving uh, all the key managerial person and employees, and ensure that employees are given necessary process training. So here the communication is very important, that what you are intending to do essentially. Then next is the monitoring phase. Monitoring phase ensures that the new processes are functioning as expected and balancing it with the key performance indicator. See here, it's very important. The analysis phase and design phase are very important. And why? Because everything has to be measured. Unless one measures this, how do we find out that these steps are successful in achieving the better performance? So it has to be essentially, there has to be matrices which have to be identified upfront, and then monitoring is done over a period of time. And next is the optimization phase. Based on feedback loop, make necessary adjustment to ensure the processes are optimized for maximum efficiency. This phase is essentially after the processes, above processes are have been stabilized. Okay, then we get into the optimization phase. So this is essentially, above phases are essentially relating to the stabilization. Okay, and then based on the feedback, one continues to make the adjustments to ensure that processes are optimized for maximum efficiency. So, as I have told you, see, this is essentially the process and approach for a company which is operating. However, uh, there could be an situations where a plant is closed, or any entity, okay, whether it is a power plant, cement plant, or a manufacturing unit that is closed. So similar process will be undertaken. That is the In that case, it will be from the analytical phase, uh, which will uh, which will give us that why the plant has been closed, that is, and understanding the organization. And then we design okay, formulated to be process map. Now, why this for also important, this to be process map? This is important essentially to be shared with the various stakeholders. So as for a company in decline, there will be very there will be large number of stakeholders who will be looking uh, at taking sort of the legal actions, or some other measures. Okay, uh, uh, and they would not be confident that company can be run further. So essentially, it gives the confidence to the stakeholders that turnaround process is on, and they should not really uh, 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 withdraw their support. So I have discussed with you analysis phase, that is the diagnostic review, crisis management. There could be, as I said, crisis management can be only for one day, or a week. However, one will have to develop, that is the to be measures which are taken, and develop a business plan which is shared uh, with the various stakeholders as required. Okay, so the stakeholder management is during all these phases. So as I said, there could be emergency phase. So emergency phase is something which is again a very short term plan. And after developing the steps or the business plan, this is implemented. And after this is implemented and the stabilization happens, then growth or renewal phase. So I'm just covering the factors and enablers, and and you will be able to relate this in the next presentation when you go through. So Ashish has so prepared accordingly. So you will realize that this outcome of turnaround or successful turnaround do not happen by chance or fluke. There is a lot of effort which goes into it, and that effort is in terms of the systematic planning which I have been discussing with you. So crisis stabilization, taking control, cash management, asset reduction, short-term financing, new leadership, that may or may not happen. So but there has to be someone, who is leading the turnaround and with this new mindset. Stakeholder focus, strategic focus, organizational change. This is also very important. Okay. Next comes critical process improvement, improved sales and marketing. See, no business plan can be successful if it does not result into the improved sales and marketing, cost reduction, quality improvement, improved responsiveness, improved information and control system. Okay, this is all matrices and all. And financial restructuring, I think that is in the last, when the stakeholders see that the business plan is working, it is successful. Company where it was, okay, 1 year back, 6 months back, 2 years back, where it was, where the company's operations were bleeding, okay, on an EBITDA level also company was making losses, or company could not be run, the plant liabilities were so high that the company could not be, or the plants could not be run on a day-to-day basis. But now it is running on a stabilized basis. So then our financial restructuring is undertaken essentially. Okay. Or we say that when we say the financial restructuring, only then an investor will come in. Okay. For a closed plant or the company which is losing money, we may not have the many buyers or the investors interested in the asset. But once asset is performing, we will have many investors interested in the asset. So these are essentially the change in mindset. So any turnaround professional, they draw the direction essentially. That is the plan. Aligning people, I think this is the most important. Motivate and inspiring, rebuilding self-belief. That it can be done. Basically, as I said, the steps which are taken and then executing that is something. Whereas the management or as a CA or a CS professional, our focus is on compliances, control and planning, budgeting and all. So in that crisis situation, what also require is the leadership mindset. So again, which I focus on the briefly, I will take a few more minutes, and then I will leave it open for Ashish to present. One should not forget this basic concept of cash flow cycle when the company is going through crisis, and which is a working capital cycle. And mostly when there is a crisis, most of the companies, they find it difficult to manage the cash flows. And so what happens, either they are operating at a very low capacity utilization, or there is a possibility that companies operations come to a grinding halt. And once companies operations come to grinding halt, it becomes very, very difficult for the operation to be restarted. There is a possibility that theft may take place. O&M expenses will go up. Okay, restart expenses will be high. Uh, so so during this period, your capital allocation is very important, and so I emphasize that selling on in credit is an investment like any other investment. So when the company is under liquidity crisis, the selling on credit is a capital allocation, and like any other investment, it should be guided by cost and benefit analysis. So simplify the rules, and when this is so the if the action simplifies the business and generate cash, you don't need to tell me, that is, do it. If it complicates the business and uses cash, don't even come to me. If it complicates the business and generate cash, let us talk. And if it simplifies the business, uses cash, let's talk. So the focus is on liquidity management essentially. Okay. So this is all. I think I have shared with you the various aspects of turnaround, and I just wanted to focus on developing a mindset, developing an evolved mindset by us professionals, uh, wherein we can contribute much more in a crisis situation by developing this mindset and various attributes. So, with this, I uh, close my uh, presentation. Uh, and uh, so, if there is any question that can be taken on later on, uh, while we finish the next presentation. So, as decide. Anjali, uh,
Yes, sir.
yeah. So we can switch to the next presentation by Ashish.
Okay. Thank you very much, sir, for nice presentation. Now, next session will be taken by ASHISH Rathi, sir. ASHISH Rathi, sir, is Chartered Accountant, IP, MBA from ISP Hyderabad and gold medalist in MCOM. He is currently founding partner of M Complete Advisor. He was partner with BDO in insolvency practice and headed insolvency business restructuring as Majaz. He will be taking session on the topic case study of SKS Power Generation Chhattisgarh Limited. Now I request Ashish to start with his session.
Thanks, Anjali.
Ashish,
So I will be sorry. Thanks, Anjali. So I will be slightly moderating and add to relate it to the turnaround mindset. Okay. Uh, so Ashish, I think first, while starting, you can tell us, in what situation you had taken over the asset, and what were the challenges which were there, which you faced. Ashish, you may start now.
Sorry, I was on mute. Sorry.
Okay.
Thank you, Satish sir, and I thank TMA India and IPA of ICSI for providing this opportunity. Satish sir, you have laid a very good background of the structure, how the turnaround professional should work, and how things should be analyzed, what corrective action has to be taken. First phase where you have to do the firefighting, then once the operations stabilize, you require a different mindset, and then third stage is the growth. So I will continue. I will take a case study on SKS Power, which was a stressed power company admitted into insolvency in April 2022. Just maybe I will lay down the outline. Disha, if you can go to the previous slide. So this is the broad outline of the presentation. I'll cover the background of the company, then go into the major reasons for stress. What Satish sir referred to is the analysis of why the company went down under. What was the status of the company when I took over as the resolution professional? Then we'll come to the analysis of the issues and what strategy we had in mind for turnaround, and then how we executed this strategy which we had formulated, and what was the outcome of that strategy, and what were the key learnings for us from this outcome. So the brief background about this company, SKS Power is a domestic coal-based thermal power plant situated at Raigad district in Chhattisgarh. It had a debt size of 2,500 crores. This was a pithead power plant, so which essentially means that it was based very close to the coal mines. Also, it had a railway siding, though it was not entirely complete when we took over. The capacity of the power plant, which was earlier envisaged, was 1200 megawatts, about 300, one unit of 300 multiplied by 4. So phase one would consist of 600 megawatt, phase two would consist of another 600. One phase was constructed and the other phase was not constructed yet. However, the common facilities relating to this in terms of the coal handling plant and the other infrastructural facilities were available for both the phases. This was situated at a land parcel of about 600 acres, which was acquired, and there was another additional 250, 300 acres, which was under litigation. The commencement of insolvency, as I mentioned, that happened in April 2022. Yeah, we can go ahead. Now let's come to the major reasons for stress. So we will dwell a little bit into the history of this company. This company was conceptualized, the power plant was envisaged in 2009, way back in 2009. The original promoters were the Gupta family and Blackstone. However, the unit got completed and operationalized only in 2018. So almost after 9-10 years, this unit got complete. Initially, it was envisaged it would get complete in the 5 years. Because of this delay, project delay happened because multiple reasons, and that led to cost overruns. This company had limited PPA tie-ups. Way back then, it was difficult to have long-term PPA tie-ups, and there was a lot of competition because the demand scenario wasn't that attractive. There were the capacity which was there in the market was more than what the demand was there. Hence, getting a PPA tie-up was very difficult. Hence, the company did not have a long-term PPA tie-up, and because they did not have a long-term PPA tie-up, they did not have a linkage coal. Linkage coal is basically if you have a long-term PPA, you get allocated coal linked to that PPA, which comes, so you have a fixed tie-up for that. So you are assured of the supply as well as the pricing at which you would get the coal. So the company had neither. On top of that, there was a litigation with a discom, with Rajasthan discom, relating to a tender in which the company had participated. The company was L3 or L4, but it was not awarded the PPA, so it had challenged that in various forums. Because of Supreme Court order, the company had that obligation of supplying coal. However, it did not supplying power rather, but it did not get linkage coal. Also, merchant trading, or what we say that trading in the market currently on the exchange, which is very lucrative now, wasn't lucrative then. The prices weren't that high. So this led to a default, and the consortium of lenders, the debt size was around 5,000 crores and with interest around 6,000, 6,500 crores. So they opted for a change of management. They ran a process and then they awarded this company to the new promoter in 2019. And the debt was resized to 2,500 crores. Now comes the next phase. So phase one happened, restructuring happened, debt was resized. So you tend to think the incoming promoter or the new shareholder was a foreign fund or a foreign company rather, which had diverse operations. So you would tend to think that everything is hunky-dory now, debt has been resized, the promoter has deep pockets. So they would come in, they would have fixed the management, have the right strategies in place, and they would run the operations very well. Bank of Baroda had funded this major portion of the debt overall. However, whatever could go wrong went wrong. Immediately after the takeover by the new shareholders, they started disputes among the shareholders, the management which was put in by the new shareholders and the earlier shareholders. There were multitude of cases filed against each other in various forums. What that led to is an exodus of the employees, because whenever there is a dispute and the direction is not clear, the good employees who can find a job elsewhere would definitely switch, and this is exactly what happened. On top of that, the parent, which was supposed to be a deep pocketed company, they were admitted into bankruptcy in their jurisdiction. So that limited their ability of infusing more funds to revive the unit. This company, when the debt was restructured at about 2,500 crores, they still had inadequate working capital, because working capital which was sanctioned earlier was not disbursed, or a minimal portion of that was disbursed due to some reasons. COVID-19 struck, and there was a scenario where the demand of take wasn't much. And the company had to resort to tying up of short-term PPAs, which had lesser margin. Also, realization of the PPAs, so they had a huge pileup of debtors. And that further was a drain on the working capital and the finances and the cash flow. So they were caught in a spiral web, and so everything was going down. Also, because the key people had left, the technical expertise which was required to run the plant was absent, and hence absent or present to a very less extent, and hence there were occasional shutdowns. When you have contracted to supply power to a discom, there are certain norms. They would say that you have to supply minimum 85% of what has been contracted. If you do not achieve that, then there are heavy penalties levied upon you. The penalties are primarily to compensate the discoms, because if they are not able to procure power from you, they'll have to go to somebody else at the last moment, and probably they have to pay a heavy price for that. So because of the plant shutdowns, this company was not able to honor its obligations, and hence heavy penalties were levied. So if I had to say, for just to take some rough numbers, let's say if I had to receive 100 rupees from a discom, if the penalty was 60, 70, then I would receive only the balance 30 or 40 rupees. This again led to a default. So within 6 months or 7 months, maybe the third quarter, the defaults started happening. And when the default happened and the company got classified as an NPA, there was a cutback in all the funds used to come to the escrow account, which was the TI account which was designated. And the banks used to appropriate about 25% of the gross collections towards settling of their dues. This put a further strain on the working capital, because the company did not have 25% margins. It was reeling under bad finances, and on top of that, this only aggravated the situation. After the account was classified as an NPA in March 2021, the bank filed a Section 7 application in September, and the company got admitted into CRP in April 2022. So now I'll come to the status when the resolution professional took over. What was the state of affairs of the company, or as Satish sir mentioned, on an as-is basis, what was there? So all the factors which I will present, they presented a very grim situation. The operations were shut. We took over in April end, or say early May we took over. Since November, December, the operations were shut because of lack of working capital, which was first factor. Then there major spares which were required were not there. Regular maintenance was not being done. The coal stock was at, when we took over, was just 5 days or 6 days of the operations. Working capital, we had just had about 4 crores in the bank, which was not even sufficient to pay off the salaries for 1 month. capex which was required. There were certain critical things which are required for the basic operations of the coal plant, and this company had a railway siding, which was then operational when we took over. Wagon tippler is a mechanical device where once you get the coal in a wagon, it is transferred or how it is tipped. So that was also not complete. So internal roads and external roads which were required as per environmental norms, those were also not done. And frequent shutdowns is what I mentioned, that because of the technical issues, certain technical issues and the working capital issues, there were frequent shutdowns in the previous year, and that led to a very low PLF, which is the PLF is the plant load factor, which is the capacity utilization essentially. Then we come to what were the on the raw material side, you need to have a tie-up, and on the sales side or the supply, when you need to have a tie-up. These are the two basic things in any business. We had issues with both. We did not have a long-term coal linkage, as I spoke about, which forced the company to procure coal at very high rates in the auction. And the auction prices, there was a good demand for the coal in the market, and the prices went up through the roof. And but the company was forced to buy it because it had obligation to sell. Certain short-term PPAs were entered into. This pushed up the cost of generation, leaving very little margin to meet the overheads and pay off the loans. There was only one PPA, which of about 100 megawatt out of the 600 megawatt capacity, and that too was a major cash drain. I'll explain in the further slides how it was a cash drain on the company. Also, there were unresolved disputes with discoms. So your customers are the discoms, and with major discoms, there were disputes because of, as I had mentioned, because you were not able to meet the obligations of supplying the power in a timely manner and the required quantity as per the contractual obligations. Then huge penalties were levied, compensation charges were levied, and hence that resulted in a build-up of the receivables, or you were not able to recover 100% of your receivables. Huge legal costs were being incurred because there was litigation, and well, litigation is expensive, we are all aware. However, there was no visibility when the monies will actually come in, even if they were rightly due. There were certain very onerous contracts which the company had entered into. So there was one contract with a trading company whereby SKS had tied up all the capacities with that trading company. Tied up in the sense it was obligated to route all the sales through that company. However, there was no tie-up essentially. So what it meant is that while that trading company did not help you with getting new PPAs, you couldn't go anywhere else, or you couldn't go directly into the market to and tie up new PPAs. You couldn't enter into a contract directly. You necessarily, by virtue of the exclusivity given in that contract, had to go through that power trading company only. There were frequent issues with the counterparties. All when they say the counterparties, including this trading company as well as the vendors, the employees, lenders. The payments to the vendors were mounting. The 6-8 months of dues to vendors were there, and hence they were reluctant to provide the necessary services without getting their dues first. Now, other key factor was, as I mentioned, that was a dispute, and there were litigations amongst the management and the shareholders. What that led to is there was no participation of the promoters in the day-to-day management. This is both a good thing and a bad thing. Good thing in the sense that why many of us are insolvency professionals, and we have faced challenges in our assignments when where we see interference from the earlier management when we try to run the company. So that part wasn't there because the promoters were not present in the day-to-day management. However, that also posed a major challenge because when the promoter is not there, then things are not probably the structure isn't there to run the company. So it is there is a proverb which says that when the cat is not there, the mice is at play. So I don't mean it in any derogatory manner. However, what happened is that it was a free run for everybody. While one employee took over the mantle of acting as the de facto CEO, there practically was no CEO in the company. There was no CFO, there was no plant head. So without these key employees, it was extremely difficult or rather impossible to run the company because there was no leadership. Then there were frequent issues, interdepartmental issues and disputes, which where people would place their interest above the company's interest because and they had a very low moral. Lapses in compliance, financials were not audited. So we were tasked with the responsibility of getting the financials up to date. Critical licenses, there was a delay in renewal, partly because of lethargy, partly because of lack of money to pay for the licenses. Compliances were pending, key compliances. We are aware that RP is responsible for all the compliances. So it was critical for us to see to it that all the compliances are back on track. There were certain other critical technical and operational impediments which we were facing. In a power plant, like in any other industry, there is a effluent management or a waste disposal system. In case of power plant, the coal which is the input has an ash content. And when you produce coal, there is a fly ash and a bottom ash, which has to be disposed of in an environmentally friendly manner or as per the prescribed norms. An ash dike is there to dump the ash or store the ash till the time it is disposed outside of the factory premises, and it has to be disposed in certain mines or designated area which is notified by the environmental authorities or the state authorities. In our case, the ash dike, which is like a landfill, you can say, that was filled beyond capacity, and it was like a landfill had become like a mountain by the time we came in, and it was very essential to address this problem first. Otherwise there could be a closure notice from the environmental authorities. So this became a kind of a sticking point for us. Railway siding, I mentioned that railway siding and wagon tipper, these were two activities which were not complete, and we had to take up the task of ensuring that we make the payments as per the contract. OEM, we did not have, the OEM was not supporting us, and they were demanding that we make the payment of the pre-CRP dues, which which we couldn't have done because we had to be in strict compliance of the insolvency code. So we had to look for another agency, and we took help of them to complete the wagon tipler and get it commissioned. The regular maintenance of this plant was not carried out because of lack of funds. And last 3 4 years there was no overhauling done. Just to draw an analogy, overhauling is like, we can say that if you have a car, you have to get it serviced, right, at regular intervals if you're running it there. So there was no servicing done of the, so that was also a major problem. Other lapses in performance, did not have a regular MIS. How to monitoring is very critical when you need to achieve a turnaround. We did not have, when we started with, there was no regular MIS which was being circulated on the performance parameters. what was the availability of coal, what is the coal stock, how much ash is disposed of, how much ash is there in the ash dike, what are the receivables like, what is the cash flow looking like in the next 1 month, 2 months, 3 months. All those things were not there. Budget wasn't prepared. Also, there was a recent invocation of large value bank guarantees just before we took over of about 200 crores. And that led to a further drain on the cash. Now we come to the analysis of the problem. Uh, this may sound very rudimentary, but this was very critical for us. We had to evaluate the core aspects, considering both the internal factors as well as the external factors. So we had to evaluate where the company was, what was the history, who were the customers, where did we get coal from, who are our other business partners in terms of the transporters or the trading partners who were there. What was the operational efficiency? What was the make of the boiler? What is the market looking like? The industry scenario? At what price we buy the coal? Do we go to the trader or do we buy it only from the coal companies, Coal India and its subsidiaries? What is the competition doing? Do we follow whatever they are doing? Should we go in for short-term trading contracts or have a long-term contract? Because every company will have a different strategy. Uh, we did the basics of doing a SWOT analysis. We figured out that our strength was that this was a pithead plant. So cost of generation, if we start producing, would be low, which would give us a major advantage when we have to price or enter into contracts. Second strength that we had was that this plant had run for 3 years, which meant while it was shut for the last 6 months, it meant that this plant could run with maybe some maintenance, repairs, and working capital. This plant could come up to speed in maybe 3 months, 6 months' time. That was our basic analysis. Also, then we coming to weaknesses, we enumerated the weaknesses in the earlier slides. So anything and everything was a weakness. Key things were not there. So we had to address those aspects. What was the opportunity? The opportunity which we had was that when we took over in April 2022, there was a power shortage in the country. The Ministry of Power was focusing on ensuring that there are no power cuts, and all the units which are in ready state, they have to produce power at full capacity. There were directions issued under the Electricity Regulation Act, and the plants which were in a state where they could come up to speed and they could start generating. So plants which were shut down, like SKS's plant, they would be given the necessary support by the ministry to start the operations again. So this was a major opportunity for us to grab and start the unit. Uh, Threats were also the environmental threats, the threat that certain vendors do not cooperate with us. Funds, if we did not have the funds, the unit could shut down even if we start the unit again. So all those things were there. We had to evaluate the assets. The major thing in a power plant or any manufacturing setup is that you have the machinery which has to be reliable. So to say that technically it has to be sound. So we had to assess that state of readiness of the equipments that we had. What were our preliminary findings? As I said, since the plant had run for 3 years, though with frequent shutdown, we could get the plant up and running. We had NTPC prepare a report for us. We engaged them. NTPC being the largest power producing company in the country and has a stellar reputation. We engaged them. They prepared a report where they gave us a detailed analysis of the activities required as per their assessment to restart the plant, what essential capex or the spares they want if the plant has to be run, and they came up with an estimate of about 50 crores. So plant it could be run in 50 crores, and then of course you need the working capital. But major stumbling block, we did not have funds, so it was very critical to have interim finance arranged. And we are all aware how difficult it is to get interim finance arranged for under CRP. Also, we could figure out that even if we start operating the plant, it isn't that it would start generating money from the day one. It would take us at least 3 to 6 months to achieve a break even, and then maybe we could make money. So any interims finance provider would also have to be on board with this approach that they are giving money to fund the losses initially. While the fund was one of the issues, the other issues like coal linkage, PPA, capex, all those things, we had to work upon it simultaneously. It couldn't be a sequential activity that I get coal linkage first, then I do PPA. Everything had to be done simultaneously. So there were so many activities, and every block had to be put into place so that we could start the unit. But one thing we were very clear about this is that we had to start the plant. We had seen and I would commend the role of the COC here, is that they also had the vision that if the plant does not start, then the value that they would get, and which they had seen from their earlier experiences, was about 1 crore or 1.5 crore per megawatt. But if the plant runs well, and there is a credible person or a credible agency running the plant, then probably they would have a chance at getting all of their dues under CRP. So with that objective in mind, that we had to enhance the value of the company, which was the fair value. We did not want to go have a liquidation value as a realization. Now, let me come to the execution part, how we executed the strategy or what steps we took. First was raising of interim finance. So we had to first assess what are the funds which are required to sustain the operations for the next 6 months. And so we did a preliminary back of the envelope calculation and came up with a number of about 125 crores, including the 50 crores which was required. So for the 50 crores required for the essential capex and maintenance activities, and about 75 crores required for working capital, purchase of coal, debtors, and also the operational expenses, salaries, and routine maintenance activity. This 125 crores was sanctioned within 15 days by the banks. And there were two COC members, Bank of Baroda and SBI. They sanctioned this amount in their respective shares. BOB had a majority share of 92%. And we had given them a plan where we said that in 6 months' time, so it would take 6 months for us to revive and achieve a break even. After that, we'll probably start making money if we have all the other pieces in place, like the coal linkage and the tie-up of PPAs, etc. Within 6 months, the plant started in 3 months' time. So around July end 2022, we were able to start the plant. One unit was operational, but we were saddled with onerous contracts. We did not have linkage, so we were burning money initially. I will also come to that how we address that situation. Around November, December, we were running the unit. However, it was running into losses, and we needed more funds. One of the stipulations in this interim finance agreement was that the limits would be progressively reduced over the next 12 months. So this 125 becomes 110, then becomes 100, then becomes 80, 90, and so on. So by that time, we were in November, December, we were overdrawn by about 30 odd crores, and we required more funds. Now, look at the scenario where one is that lenders have given you money of 125 crores. Somebody may say that you put in good money after bad money. Then we are overdrawn, and then we are asking for more funds. We are saying that we need 75 crores to further sustain the operations. We are very close to break even, and we can do much better. It was so difficult for the lenders to sanction these facilities. They put in a condition that you have to regularize the facilities. With great difficulty, we were able to regularize the facility, and we were given additional 75 crores, which we put to very good use. It was important for us to build a credibility with the lenders or the interim service finance provider to see to it that the funds were utilized in the right manner. So we had an external agency which was suggested, or we asked the banks to suggest an agency which they would want to deploy for a pre-audit. So all the expenses, all the payments were audited. This was an additional layer of check which would give comfort. And we had a day-to-day monitoring and review of the fund utilization. Cash flow was prepared on a weekly basis, and we tried to ensure that whatever we had budgeted, we had a cash budget, whatever we had budgeted, that happens in terms of the inflows, as well as the outflows are not more than what we have budgeted. Satish sir also showed that cycle of cash to cash cycle he showed. This was extremely critical for us. We could not have taken a credit risk, because one of the major factors which contributed to the company going down under were the stuck receivables with discoms. So we couldn't take that risk. What we did is we had a government body, or let's say a NTPC arm as our trading partner, and we had an arrangement with them that while we are selling through to the discoms through them, they will make the payment to us upfront within 1 or 2 days, and they would bear the credit risk. Of course, there was a premium and a hefty premium to be paid for that, but that was worth it, because unless you had cash, you couldn't survive. So at that point in time, it was extremely critical to get in cash as soon as possible. We also tracked all the non-critical expenses on the purchases. Additional layers of check were put on the areas where there could be a potential leakage. And budgeting was done, and clear ownership or key tasks were assigned to the teams, and they were given the required autonomy to operate. At the same time, they were responsible for the tasks which they were given to. Yeah, good. The finance function, which we thought would be the critical function, where we did not have a CFO, so we had to get in an external chartered accountant hired, and a firm we had hired for setting up a system of MIS, cash flow forecast, daily cash monitoring, all those things I mentioned. The financials which were not finalized, it was very important for us to have the financials, one from the perspective of the bidders who were coming in, because they wanted to see the audited financials. Secondly, whenever we had to participate in any tender, whether it is a short term or a long term PPA tender, there you were required to submit the audited financials. So without that audited financials, we were getting handicapped. We had to approve. We did not get the required cooperation initially from the directors. They said that we are not there in the management, hence we do not know anything. How can we sign the financials? So we had to approach NCLT and CLAT and seek directions. And we were able to successfully get the directions and get the directors to finalize the past financials of 3 years. Yeah. One of the critical things which was absent in the company was the technical expertise. it was very essential for the company to have a credible O&M partner who could provide the required technical expertise to run the company. This would have a positive impact on multiple folds. So, one is that it helps build you credibility with the bidder. If the plant is being operated by a reputed O&M partner, they know that the plant is being run in a proper manner. There is no penny pinching which is happening. The spares would be there. It is being run in a very kosher manner. So we had NTPC. There was a nudge from the ministry also, and because of that, we signed up NTPC to provide O&M services to the company. The lenders were also willingly approved the appointment of NTPC to work as the O&M partner. It also built credibility with the lenders because they knew that a reputed agency is, or the largest power producer in the company in the country is operating or helping operate the plant. Also, whenever we had to deal with Coal India on one side, we had to deal with the discoms or the trading company on the other side with the regulator, WRLDC, the load dispatch company regulators. So all those things, we found it much easier when we had NTPC with us. 15 senior people from their side were deployed to oversee each critical function within the company. So whatever critical functions were there in terms of the technical aspects, like the boiler, turbine, say energy efficiency, safety, coal purchase, coal handling, all those aspects, there we had 15 senior people who were heading that function. Initially, this led to a friction between the company people, existing SKS employees, and NTPC, because it's human nature that whenever you have somebody new come in, there is a bit of a resistance. But however, they all saw that the objective or the common objective was that we had to run the plant. We had to start the plant, run the plant, and only if the plant runs successfully for a long period of time can the operations revive, cash flow would be generated, all of them would be getting their salaries on time. So with that common objective, we all moved forward. We had to appoint KMPs, as I mentioned in the earlier slide, that we did not have KMPs, we did not have CEO, CFO. So in discussion with the lenders, we appointed the KMPs. Initially, there were discussions on why the KMPs are required. NTPC is doing the technical part. RP is handling the role of as the CEO. The de facto CEO is handling the role. Why do you need? However, a full-time KMP was absolutely essential, and we were able to convince the stakeholders. We were facing the challenges in terms of human resources. A company under CIRP with a shut plant initially, there was no visibility initially, and the people had opportunities elsewhere. So it was difficult to get people. So we had to, a company under insolvency, we had a major challenge that we had to offer higher salaries than the industry to attract people. Certain areas we were not able to get people, so we had to resort to employing retired people in that function on a contractual basis for 6 months or 1 year as a stopgap measure. With the interim finance which was there, we made it our priority that we would do the salary payouts on time. And this was one of our key priorities, and we stuck to that even though the company was initially incurring losses for the first 5-6 months. Annual increments were done on time. Though there was some resistance on where the company is under CIP, why should you do annual increments? However, we could rally the support of the stakeholders, and we were able to do the annual increments. For operational turnaround, what all activities were required? One was the linkage coal was absolutely essential. We needed a reliable supply of coal at certain fixed prices. We couldn't rely upon or we couldn't be exposed to auction coal prices, which would vary from 3,000 rupees a ton to 6,000 rupees a ton, so which was very high. So we needed auction coal. As I had mentioned, the opportunity for us was that the country was undergoing a power crisis, and we had the required support of the Ministry of Power. We had to ask for it. We conducted meetings with the ministry officials. We told them and convinced them that without this linkage coal, we would not be able to continue to run the plant beyond a month or two. And with their support and necessary support, we were able to get the linkage coal. And this ensured that we were able to plug the losses on a low margin PPA that we had. Other factor that we had to work upon was on the sales side. Our capacities were tied up with a power trading company, which I mentioned. And so unless we walked out of that agreement, we couldn't sell to anybody else. So initially, when we started discussion with them, they were very reluctant because of the reputation of the company, the past conduct, and their experience of dealing with the company. They were very reluctant to negotiate. However, we were on the job, and we were able to convince them that it was mutually beneficial to terminate the agreement. It freed them of the obligation of having to get us a discom for a PPA. At the same time, it freed us, or the capacities were freed, and hence we could enter into a contract with any other discom, or get into an arrangement with another power trading company. So after 2 months of negotiation, we were able to successfully terminate that agreement without any payout from our side. As I covered that the company did not have PPAs, did not have, just there was one PPA which was loss-making PPA. After we had the linkage coal tie-up, it became a break-even. However, we were not making money on that. So it was essential for us to enter into new PPAs which could generate money. While we started entering into short-term contracts, 3 months, 6 months contracts with the discoms for some capacity. However, a long-term PPA was a must so that we have the linkage coal facility. Now, this long-term under CRP, when the process is going to be for the 6 months, 1 year, or 1.5 years, how do you enter into a 5-year contract? What it means is that you are binding the incoming investor also with that PPA, and he may have different thoughts around that. He may not want a long-term PPA. He may say that I want to do everything on the in the all the sales on the exchange. I would do merchant trading only. It was a very difficult decision. I would say it was a clear decision. However, it took us time to arrive at that decision on whether we should bid for a 5-year PPA. And here also, I would commend the role of the or and the vision which the COC had, that if we have a long-term PPA, that would work in our favor. One is that we are not tying up power at low rates. We would be getting very good rate in the for this PPA, and hence it would be value accretive for the incoming investor also. At the same time, the value which is offered to all the stakeholders in the process would also increase. Uh, Low margin PPA which we had with Rajasthan Discom, there was litigation which was ongoing. We were being asked to, this was a contract which traditionally speaking was a good contract, because if you have a 25-year-old PPA, you have an assured offtake. And as I said, traditionally you would never want to terminate a 25-year-old PPA where you have balance 17 years to go. However, we realized that the current market scenario which was there was not did not support the prices or the prices at which we had to supply, and hence it was more profitable for us from a very long term perspective to terminate this PPA. And we had that window of opportunity. This also took a lot of time in terms of the discussions, building a consensus around that among all the stakeholders. NTPC also had a different view initially. Then after discussion, they also were agreeable on this point. And this was one of the key decisions that we took, which also resulted in boosting the valuation. Coming to the essential repairs or capex which is required to maintain the plant on a going concern basis, and to assure the discoms or your customers that you would be supplying, you would be a reliable source of supplying power. So all the essential repairs were being carried out. We were guided by the technical team or the NTPC team, and we never asked them to cut corners. While we would review whatever expense is going to be incurred, all essential capex, it was a free pass kind of. We had to do those expenses without any dimmer or any doubt whatsoever. We would have incurred about 200 crores on maintenance and capex in the 2.5 years of the CRP. What that resulted into is minimum downtime. The operations were efficient in the sense that we were able to generate the station heat rate, which is the measure of efficiency, that came down. When they say measure of efficiency, the station heat rate is the energy which is required to produce a 1 megawatt. So the lower, the better. So we had a lower station heat rate. The PLF went up because we were able to tie up PPAs. The unit was running. Minimum downtime was there. The failures were not there. So all this contributed to the plant achieving a record PLF in the history of the company. Another, we were very focused on the value pockets where the monies can be generated. So wherever we saw that there were low hanging fruits in terms of, let's say, pursuing, getting the old recoveries. If we had to pursue litigation, we would pursue litigation, have discussions. If we had to enter into certain settlements, we would do that. Because a commercial decision would have had to be taken to get more cash flows into the company to run the unit. We were able to have a positive outcome in about in a couple of cases where 250 crores amount is what was awarded to SKS. However, that matter is in appeals, but the monies have been deposited before the court. So when you have these receivables, while you can call them contingent receivables, the valuation of the company or the from the perspective of the bidder, they would tend to place a higher value where you have a positive outcome. Now, whatever we did, what did that lead to? So, as they say, so let's see what happened. In the CRP, the entire process, we were able to get EOIs from 23 PRAs, which was very high. So we had so many people interested in the asset. Of course, the key strengths were there. As I said, it is a pithead plant. The plant had run, so people were aware that the plant can run. Reputed players submitted resolution plans. Overall, we had about 7 resolution plans submitted in the first round by the likes of Reliance, Adani, NTPC, Jindal, Torrent, SADA, and also a foreign player also submitted a resolution plan. Initially, in the first round, we got bids averaging to about 1,000 crores. However, because of one is the increased competition, which also was spurred by the fact that the plant was running, the bids increased to 2,000 crore plus in the second round, and which meant that the financial creditors would get a full recovery of their dues. Let me when I say let's see the outcome. The operational indicators, while there would be several operational indicators, I have chosen just one key indicator, which is the PLF, or the how efficient, what is the capacity utilization. Higher the capacity utilization, higher the turnover, and higher is the EBITDA and the cash generation. So, the years 2021 and 21-22 were the pre-CRP period. If you see, this is denoted in black. 2021 we had a PLF of 36%. 21-22 it was 32%. The first year when we took over, which was FY 22-23, we took over towards the end of April. So I'm just considering the full year. The PLF was 28%. Which if you see, because initially the PLF was low, we were able to run only one unit because of lack of working capital. We also wanted to see that one unit gets stabilized, then we start the second unit. And so from the second year of operations, you see there's a marked improvement. So 2023-24 full year, we had a PLF of 56%. For coming to next year, so for the first quarter of 2024-25, we were able to achieve a PLF of 72%, which was the industry average. So all this was facilitated, all this happened because all the factors or all the things which were essential to turn around the company, that they fell into place. Of course, the market was supporting, but supporting, and there was demand, so the prices were lucrative. But the thing is that unless you have, if your ship is grounded or your plane is grounded, then you can't really do anything unless the ship is ready to sail. You put it in the waters, and when then only you can ride the tide. So what the higher PLF led to is an increase in the revenues. So if you see the charts which are displayed, pre-CRP, which we have again bifurcated into pre-CRP and post-CRP. Pre-CRP, the company in 2021 had done about 635 crores of revenue. 21-22, they did 527 crores of revenue. First year, when we took over, we were able to achieve 500 crores. Next year, there was marked improvement. We did close to 1400 crores, 1367 crores. And the next year budgets for, so this current year budgets were 2000 for 2024-25 were about 1800 crores is what we were targeting at about 75% PLF, and we were able to do 600 crores in the first quarter itself. Now let us look at the EBITDA numbers. Pre-CRP, the company did about 27% of EBITDA, 170 crores in 2021. And next year, the company was into losses, 2021-22, about 42 crores negative. And when we took over 2022-23, first year of operations, we also lost money, about 47 crores negative. We recouped all of those losses and more in the next year, 2023-24. We did 345 crores at 25% EBITDA. Very important factor is this EBITDA is not was realized in the sense that the money, we did not have a single bad debt. All the monies were realized, and they were realized well before time. So entire 345 crores, you can say, went into the cash. Q1 of this year, we did about 280 crores of EBITDA, which was a record 47% on the turnover of about 600 crores, which we did. Now, okay, the numbers are good, PLF is good, but what that led to? We had about 200 crores of limits with the banks. We paid off all the limits. Entire amount was prepaid to the banks much ahead of the schedule. essentially whatever money they put in, it was put to good use and it could achieve the objectives for which it was put to use. We were able to generate 500 crores of cash when the CRP ended. This was a huge number. 100% recovery to the financial creditors. The creditors were given 100% recovery as a part of the resolution plan. They were very generous in allocating some sums to operational creditors. And as per the distribution which was fixed by the banks, both BOB and SBI, they gave about 25% recoveries to the operational creditors. With this turnaround of the operations which happened, which led to generation of substantial cash, there was about 500 crores as I mentioned. The operational creditors were already paid 145, 150 crores. This balance cash went towards satisfaction of the dues of operational creditors, and they also got a 100% recovery. Here, the role of the COC is very important, and they need to be commended for the approach that they took in terms of allocating the money towards the operational creditors, which are an unrepresented party in the on the COC. They are not being represented. They were not being represented. However, it is the fiduciary duty of the RP and the COC to ensure that their interests are taken care of. As per the RFRP, all the cash which is generated during which many of you would have observed, as per RFRP, generally it stipulates that the cash which is generated goes to the benefit of the COC. However, they took a very benevolent approach, a very generous approach, and they allocated roughly 450 crores towards the balance dues of the operational creditors. So this would be one of the few cases where both the OCs and the FCs have got 100% recovery. Now we come to the key learnings. Key learnings for us, what we could gather from this assignment is that you need not be a technical expert. We were not engineers. We did not have engineers in our team who were from the power sector. However, you need to have a commercial bent of mind. You should know how to drive because you are in the driver's seat. People would look up to you for directions. So you have to be focused and you should have a clear vision where you want to lead the company to. But you cannot replace the technical skills which are required to run the plant. Hence, you should focus on getting the best technical expertise which is required for the industry. Other key thing which we figured out was that you have to work with all the stakeholders and you have to proactively build trust with them. We had taken a borrowing of about 200 crores from the stakeholders. They trusted us with that kind of money that it would be put to good use. We were being trusted by the Ministry of Finance, and the expectation was that we will bring the plant up and running in 3-4 months' time and contribute to the electricity demand in the country. So we had to live up to that expectation, and a lot of decisions which we took were not easy decisions. As I mentioned, where you do not know what is a short term, what is long term in a CRP. You know that this process is for maybe 1 year, 1.5 years. How do you take decisions which go beyond 1.5 years, which go to 4 years, 5 years? You have to build consensus, and for that proactively building trust with the stakeholders was very important. We had appointed auditors. For one, I mentioned for pre-audit of expenses. We also appointed auditors to do a coal verification of the processes which were employed in terms of procuring the coal, awarding the contracts. Additional layers of checks were there, and we used to share the reports on a monthly basis with the stakeholders. In the COC meeting, we would also have NTPC give a presentation on the key things during the last month. What are the key findings? How do we address? So it was an all-inclusive approach which we took, and hence we were able to build a lot of trust with the COC members. The other aspect is what we learned is you have to be agile in your approach. As was mentioned in the previous presentation, the initial phase is where you have to stabilize the operation. So you are in a firefighting mode. The employees in the company were in a firefighting mode for the last 3 years. So you have to get them out of that mindset. Once we achieved the break even, the next focus was on how do we optimize our operations? How do we generate more cash? For that, you need a very different approach. You cannot have an ultra conservative approach. You need to think from a very different angle. And whatever strategies you have formulated, it's not that you'll get 100% success. You need to reevaluate every time, and then if required you should be open to course correction. If you feel something has not worked out, you should be bold enough to admit your mistakes and move on. Other point is you have to prioritize. There would be 100 things which can be fixed. However, you don't have the bandwidth to fix everything. And you cannot waste your time and energy in trying to fix everything. You have to first fix the things which you have to plug the major hole which will prevent the ship from sinking. Then you try to fix the other things once you have stabilized the operations. So it is very essential to pick your battles. The importance of a great team cannot be undermined. I was fortunate to have a great team working alongside me. I have my colleagues Zenat and Disha also there on this call, and they were able to take a lot of load off my shoulder in terms of the process part. And they could handle that independently. They were present throughout this process and they did a wonderful job, which helped me to focus more on the operations, devote a lot of time on the operations, interact with the employees, with the technical people, and fix the whole piece. Of course, the company employees were also very supportive, very cooperative throughout the process, and hence we were able to achieve the results. Other critical learning for us was that whenever a contract is entered into, you should have a clearly defined exit clause also. Because what sounds good at a certain point in time may change after a few years. And at that point in time, you should have an exit clause if things don't look too good for you, because contracts are the basis or the genesis for the cash flows. If you tie yourself down in certain onerous contracts, then probably you are tying up yourself in knots and you'll not be able to move forward. So with this, I think this is all from our side. Thank you so much for this opportunity. Would be happy to take questions at a later stage.
Thank you very much, sir, for a nice session. Now the next session will be
Uh,
jointly taken by Rocky Ravinder Gupta sir and Indu Basu ma'am.
Uh,
Rocky Ravinder Gupta sir is lawyer, Insol Fellow, IP mediator and president of TMA India, and Indu Basu ma'am is member of TMA, chair of Network of Women Working Group and health sector expert in TMA. Ma'am and sir are taking session on the topic developing soft skills, conflict management between stakeholders. Now, I will request both speakers, Rocky sir and Indu ma'am, to start with their session.
I think Satish ji want to
Ro-
speak something.
Yes, sir.
y- yeah, right. Before Rocky takes over the baton, uh, so uh, I just want to emphasize that the turnaround, as I mentioned, turnaround is not the job of only the turnaround. So any professional with the requisite mindset and skill set can be a turnaround manager. And as you have seen in this example, there was no big four, okay, to guide. So Ashish, with his right kind of mindset, with his commercial acumen, and with no technical knowledge, could revitalize the asset in a short period. And as you may see, the challenges were huge. Uh, a large plant, which is not working, uh, employees have left, key managerial persons are not there, balance sheet not finalized, a plant, which has not been run, where a private equity is a shareholder. In spite of that, there is so the challenges were too many, and when you come in this kind of situation, only with the solution oriented approach can help. So thanks, Ashish, for sharing with us this kind of case study. Now, since Rocky, what do you say, since the next topic is on the soft skill, but if there is any question, say, on this turnaround skill sets, so if any member or participant would like to pose. With your permission, Rocky.
Please go ahead. Go ahead.
Sir, I have one question.
Go ahead, please.
Can you hear me?
Yeah, we can hear you, Ravindra. Please go ahead.
Yeah, Ravinder here. Sir, this turnaround management consultants are should they be a regulated profession, or as you said, anybody can be people with talent and who can really understand the industry? They should be running it. Should it be an art, or should it be a regulated profession?
So Rocky, I think even though I said okay, but I think it will be appropriate if you take this.
So Ravindranath, I think everybody has seen how the regulated professions have been going on. So, in my opinion, the turnaround profession should not be regulated. It is definitely a profession which can help out the promoters, the companies, the businesses, and it should be between the businesses and the turnaround professional to work together to bring the business out of distress. If not, yes, there are formal insolvency and other means to go ahead if the company or a business cannot come out of a distress after even the turnaround professional has tried his best to do that. So, in my opinion, should not be regulated. Probably you might have a different opinion. Have I answered your question, Rabindra?
Yeah, thank you, sir.
I think at the moment, the what in TMA we are trying to do is we are trying to evolve this mindset and develop this mindset, amongst various professionals.
Yeah.
Yeah, and next question, please.
So if there is no other question, we can go to Indu to start her presentation. I'll be assisting Indu in her presentation.
Thank you.
Thank you.
Thank you, Satish. Thank you, Rashish.
Can everyone see my screen?
Yes, Indu, we can.
Wonderful. Well, good afternoon, everyone. Conflict management is our topic today in a business stress situation. What is it that makes a conflict stress situation? What is conflict? What do we understand about a conflict? Let's delve into all of this today. We're going to try and keep it as precise as possible. Rocky, every time, will be assisting me where I need to understand what he's saying. I'm going to pose questions. Please keep your questions ready. Yeah, because we are here in an interactive kind of a situation. Excuse me, I need to get my cursor rolling. All right. As human beings, do we understand that conflict is a very important part of our existence? As children, how many people of you here have seen little children play? Your own children, other children?
smallest children, ones that can barely sit up, will try and snatch things out of the other child's hand. Have you seen that? Have you seen them try and create such a big ruckus because they didn't have that broken toy that the child in front of them had? It was a broken toy, but they wanted it. This is innate human nature. This is our primal instinct. Our primal instinct is a desire to possess, to be jealous, to have the last say. It is mine. I will have it, which is the jungle law of survival of the fittest. And that is why the meek child gets beaten, bullied to a very large extent through his childhood, through his adulthood, because it is a primal instinct of ours, of self-gratification. I need it, and therefore I get it. And then that develops, when we come into more people, it develops into something that is a competitive mode. He has it now, I need it. And I need to be better of him. So now we are getting into an ambition. And these are all things that are in us. They are primal instincts that exist in human beings. Civilization only curbs it, teaches us benevolence, teaches us sharing, teaches us living in a community. So if I have 2 potatoes, let me share 1 potato with you. If I have 1 roti, let me share 1 roti with you. But these are not normal. These are brought in by civilization. On your screen, there is a graph. This is a graph plotting competitiveness, the level of competitiveness, and the level of cooperation. Cooperation comes with civilization, with community living, with living with other people and understanding that we are all coming together for a common good. So if you look at this graph, when competitiveness is low, there is avoidance. Competitiveness is important in today's world because with competitiveness brings competition. Competition brings getting better revenues, market share. But in the ideal world, if you are low on competitiveness, you're even low on cooperation. There is pure avoidance. If you are very high on cooperation, you are constantly accommodating, but the competitiveness is low. So you're not competing to get better, to get best. And when you have a mix of both, that is the ideal world. That is where you have collaboration. Collaboration in today's world spells coming together to make an organization, a team, a vertical, not only successful, but ahead. Be a leader. And that is what is important. Who are the stakeholders in this kind of a turnaround situation? There are stakeholders in every organization. But when it comes to a turnaround situation, of course, promoters, they are the people who head the organization, as it were. Financial creditors, it's all about the money, honey. Always. Vendors, people who supply you your inputs into your organization to produce. Employees, one of your very, very major stakeholders, your customers, the most important people. Why would you otherwise have an organization if you didn't have customers? And government departments. We all know why government departments are there. What is a business stress situation? What happens in a business stress situation? When do you say a business is stressed? Is when an organization is not working towards growth of revenue or growth of the organization as of products, manufacturing, market share. It's not being achieved. That is when the business is stressed. The management of a turnaround process is definitely focused on corporate renewal, changing the structure, changing processes, changing its systems, changing the products. It could go through a metamorphosis on different levels to bring in life into a corporate that is struggling to achieve its goals. And this process of transformation of any declining organization or vertical into a profitable one where revenues are coming in, that's what defines it, right? Market share, revenue, profitability is done mostly by reorganizing leadership, processes, systems, finances. There are a whole lot of things that go through changes to bring it about.
Okay. So Indu, I'll just interject here. When we talk about business stress situations, we understand that someone who has started a business, say a manufacturing business, has taken care of all the financial and business plans, and if they do not work in the way they were supposed to work, the stress is going to be created. And whenever the stress is created, it is somehow uh, is a breeding ground for conflicts between different stakeholders. As and when there is a stress in the business or a company, something is not working right. That is for sure. That is a given. That nothing is working right in the company or something is not working right in the company. So there is going to be some sort of a stress between the stakeholders. Like Indu said, jealousy, competitiveness, egos, they would all come into play. And it would create stress for any one, two, or three, or all stakeholders. At that point in time, when the business stress is very high and the conflicts are huge, think of a situation where an IP wants to take a decision in the benefit of the company, but other stakeholders like the financial creditors or the vendors or other stakeholders start questioning the IP as to what you're going to do with this decision. And this is because the perception of every person is is on their own benefit and not for the collective benefit of the company or the business. I mean, there would be gossips, there would be groupism, people would be looking at their own benefit coming out of whatever they can get from the company. They are not, they do not have a long term vision that probably the company can get back to the place where it was making more profits, and they would be given their salaries, the vendors would be paid out, the financial creditors would be getting their money. So there's no long term vision in this. Everybody is looking at a short term vision of recovery, and everybody knows that most of the companies are liquidated because there is no humongous plan between stakeholders to make the company work. Employees look for the remuneration and salaries. The vendors look at the payments that is due to them. The financial creditors would always look at decreasing or the maximizing recovery from the corporate data. So all the stakeholders are working for their own benefits. No one is working collectively for the collective benefit of all the stakeholders. So at this point in time, the morals are very low and the insecurities are very high. Indu, can we go to the next slide, please? The probable conflict situations. Now, since most of you would be IPs here, I think, and look, or some advocates or chartered accountants who have looked at different conflict situations. So when we are looking at a promoter and a minority shareholder conflict, this is a conflict which arises in a distress situation where there could be a dispute over control of the company, and it could be something to do with the dilution of equity if some external funding is being brought into the company, and the minority stakeholder shareholder can look at not to dilute his equity in the company. Promoters may prioritize survival or long-term strategies, whereas the minority shareholders may look at a short-term benefits. Then we look at conflict between promoters and financial creditors. There could be a disagreement over the restructuring and the changing of the loan documents and their terms. There could be accusations of mismanagement uh, by the board of directors, because all decisions taken in the company are taken by the board of directors. There could be differing business objectives between the promoters and the financial creditors. Promoters might want to hold on to the company at all cost, while creditors may prioritize debt recovery through liquidation or restructuring. There could be disagreements between the financial creditors. There could be divergence in recovery expectations that could be based upon the valuation of the company or otherwise. There could be conflicts in priority. Different classes of creditor could may have conflicting interests regarding debt repayment structures and timelines. There could be deadlock in decision making. uh, Normally, uh, in COC, there could be a deadlock. For the financial creditors may struggle to reach a consensus on the best way forward, or when a resolution plan comes in, there could be conflict on the terms and conditions of that resolution plan. There could be vendor crisis like halting supplies due to payment delays. There could be supply chain disruptions which can effectively make a company insolvent. The negotiations may break down between vendor and the promoters on payment terms or shorter payment credits. They could be and promoters can initiate legal cases against the promoter. Sorry, the vendors can initiate legal cases against the promoter for non-payments. And then coming on to the employees, when there is a distress situation, the conflicts would occur in terms of that they would be fearing layoffs. So everything during a conflict situation uh, turns into an emotional impact, and that emotional impact creates conflicts between two parties or two human beings. So fear of layoffs is one of them. Then there could be a situation when the salaries are not paid on time because of this stress situation, because there is a cash flow situation where there is a delay in paying the salaries. The employees could get aggravated because of that. And on the basis of the aggravation and the anger in the employees towards the business or the company or the board of directors, it could lead to low employee morale, and could directly lead to less productivity. And customer is a major person or a major stakeholder in any sort of a situation, because he is the revenue generator. Without a revenue, company is going to die anyway. So the customer, if he loses trust in the company's product, it's going to be a bad situation for the company. If there is a customer who takes a major chunk of your production, that customer has to be taken care of, and the conflict situation needs to be diffused as soon as possible, because he could affect the revenues. And and this sort of a unrest in the company, and some sort of a conflict situation can impact the long term relationship between the customers who are big customers of the company, and can lead to loss of business and create more financial distress for the company if not mitigated within the timelines. When we talk about the government is one of the major litigators in India. There are normally regulatory and tax conflicts. There could be non-compliance issues with different government departments like SEBI or income tax authorities or the registrar of companies, MCA, etc. And there could be licensing and approval delays that might happen because of all these regulatory conflicts. Moreover, there could be a pressure from uh, public interest litigations, which normally crop up in case there is something which is affecting the public at large. So, all these conflict situations need to be mitigated as soon as possible before they become so big that they cannot be controlled. Yes, Indu, back to you.
Thanks so much, Rocky. So, all this tells us what? There is a huge underlying issue which is causing the organization stress. But there are a lot of layers on this which create a bigger conflict than there really is sometimes. Clashing egos, The biggest one being the lack of communication or miscommunication going around in the organization. And this leads to issues with perception and management of expectations. When perceptions are not handled properly, when there are misperceptions happening all over the organization, it clearly indicates inadequate information flow within the organization. And this normally happens with a lack of leadership. Leaders are absent. There are managers, there are task performers, but there are no leaders to take this forward. And these are the structured, now this is very academic. These are very structured kinds of conflicts that come up in a stress situation in an organization. A structural conflict where there is obviously a limited number of resources available for functioning, and there are inefficiencies in that, in its allocation, in its utilization, and therefore leading to production inefficiencies. Sometimes it's outdated technology. Sometimes there is no new technology being brought in because everything has a cost. And right now, the financial resources are extremely stretched, and therefore they are not being able to bring those in. There could be redundant infrastructure. There could be people who are not savvy with these new technologies to even bring in technology and function on them.
I'll just interject here. All the situations that we see within the CIRP or the insolvency law are the manifestation of this structural conflict. This structural conflict gives rise to production inefficiencies. This gives, if this also affects the revenues, because if the production is inefficient, there would be a quality issue which would lead to less revenues coming in, which would lead to negative cash flows. Further, it could affect the whole financial system in the business or the company. These structural conflicts actually are responsible for a company getting into insolvency. Other things would come later. The initiator of any sort of an insolvency is a structural conflict. And if we can um identify this structural conflict prior to they getting into a bad situation, which Satish ji talked about early warning signals. This is one of the early warning signals that needs to be taken care of as soon as possible. And when I say ASAP, it is not a metaphorical statement. It is an actual statement which needs to be tackled at immediately at that point in time, at point it occurs, and that would resolve the conflict. Yes, please go ahead.
The other kind of conflict is the external conflict, equally important, but it comes from outside the organization, like the suppliers, your vendors, your creditors, financiers. These are people that could create situations of conflict that need to be handled, as Rocky said, ASAP. Why? Because these all create issues within the organization that, if not handled promptly, can get coated with a lot of foam that leads to a bigger ball, and we don't want that bigger ball to come, because the bigger the ball, the bigger issues that we face, the more people, the more resources, the more effort has to be made to dissipate that, to get the organization back to health. The next are interpersonal conflicts. These conflicts are within the organization, amongst the people within the organization. One of the major issues of conflict are leadership. Today, when we look at, even in our everyday lives, when we looked at our politicians, we called them leaders. Today, we don't call them leaders, we call them politicians. We call them netas. We don't call them leaders. Why? Because we are basically lacking the leadership skills today to make people rise above being managers and task operators to being leaders. And the day we have more leaders, the organization itself becomes a winning organization that will handle employee disputes, will keep the team together, to keep team dynamics strong, to keep the team one. And when the team is one, when the employee disputes are not there, When there are leaders who are your managers or your super managers, you automatically come into a situation where there are no insecurities amongst teams, amongst the
And
levels.
and Indu, the best part is that let's ask the participants here, who do you think the leaders are? Can anyone tell me
Good question.
who
I
is
always bring that up.
who is the leader? Please tell me who is the leader or who's in a leadership role.
Anyone who is responsible for delivering the results.
Yes, and who is responsible to delivering the results in a CIRP?
RP.
Exactly. As an RP or a turnaround professional who is taking care of the company as a CRO is in a leadership position. And it is up to you to resolve all these disputes and bring the company back to normal. It is you who have to do that. It is you who have to take the responsibility of bringing the company back to its normal state. So your position is very critical, and you are the person who everybody is looking up to bring back the company to a normal situation. Yes, Indu, back to you.
Then there are some things called manufactured conflicts. These manufactured conflicts are not necessarily bad. Sometimes organization delve into manufactured conflict to create an atmosphere of competition, say in the sales team. There are two teams made. The better team who can outsell the other team gets maybe a holiday to Bangkok or something like that. These are manufactured conflicts that are brought in for a purpose. And they do create divisions within your teams. However, these kind of divisions help the organization win more market share, win more production growth, win more customers, and grow in the long run. So they're not really always bad. But sometimes, most of the times, team dynamics suffer. If it's for the overall good, if the company grows by having manufactured conflict, great. But in stress situations, we normally say do not keep manufactured conflicts there, because what we need is everybody's confidence coming in. What are the causes of conflicts? Now we'll check these causes of conflicts at two levels. One is a micro level and one is a macro level. One is a nitty-gritties level and one is a level of a bird's eye. On the micro level, diverging interests of stakeholders is always very big. Promoters want something, financiers want something else. Your vendors will want their terms of payment to be maintained. Financiers are saying, no, we'll have to increase the terms of payment. We can't do a 30-day credit, we have to do a 90-day credit. So there are always these diverging interests of stakeholders that one has to manage. And if you don't manage them, they will lead to stakeholder interest clash. There will be disputes. There will be control of different aspects of the organization that will create these disputes. For example, managing the ambitions of your managers, your senior managers, your mid-managerial level, handling the control over management. And the biggest problem with all of this is our increasing consumerism, because there is pressure. As Rocky said, there is a lot of personal things that happen. Psychology plays in. Consumerism at home is a major pressure on everyone within the ranks to perform such that they earn more. When you have stressed assets, their earning could go into a jeopardy, and that's where problems start happening. There is a huge claim on these conflicting and very limited resources that are there within stress situations, and that leads to disagreements of the problem at hand. Somebody will say it's the production problem, somebody will say the sales team is not doing too good, somebody will say our processes are not right. So there is a huge disagreement in problems and problem resolution, the approach to take. And so there is this unequal power dynamics between all the stakeholders that happen. Imagine taking all this into consideration to be able to do a better qualified conflict resolution. Again, on the micro level, we also come to back to lack of transparency, lack of flow of information, or misinformation coming down. Yeah, you have emotional, you have psychological factors happening. You have a lot of insecurities playing in. And Rocky, do you want to talk about the differing valuation of assets and
Yes, first I would like to talk on the manufactured conflict. So, a manufactured conflict can be a boon or a bane. If utilized properly, a manufactured conflict can get you out of conflicts. And if not done properly, it could get you into some trouble. Just I would like to give you an example that in one of I mean, I will not name the business or a company, but one of the matters which we were handling, the employees was not listening to the CRO, the chief restructuring officer. So what does he do? He goes and tells an employee, do something, and that employee refuses. Immediately, the CRO creates a conflict situation there and throws that person out of the company. And he tells the promoter that if you do not throw him out, nobody is going to respect me as a CRO, and I have a role to play to get this company back uh, into black from red. And this worked. The employee was taken back into the company fold after 10 days when he apologized to CRO. And this was a case where the manufactured conflict made the CRO's life much more easy because everybody started to listen to him, started to respect him, and that company ultimately came out of stress. And with respect to valuations, there, I mean, you all are have something to do with CIRP, either as advisors or as RPs or as liquidators. You would understand that valuation is one of the major cause of conflict between intersay between the creditors, and it is very essential to have proper valuations done so that these sort of conflicts can be uh, mitigated as soon as possible. Moreover, the resolution plans would be dependent upon those valuations as well. So, to having a correct and complete valuation of total assets of the company is very important. Yeah, Indu, please. Yeah, Indu, over to you.
yeah, yeah. Okay, so once we've established that at the macro level now, financial pressures, uncertainty not only amongst the employees but also amongst the financiers, promoters, top level management will always trickle down and cause that insecurity trickle down effect, which will then have a resistance from employees to any kind of change, whether it comes from their management or comes from the new management brought in as part of the restructuring professionals. This entire slush situation again goes and impacts the goals between stakeholders, and flow of information again gets disrupted. It becomes a constant slush which is constantly churning and getting into each other's way. One, when we talk about these causes of conflict and to resolve them, we always have to break these cycles somewhere. We have to constantly get into where these conflicts are gaining momentum and try and break that cycle. The biggest thing that can be done is the turnaround professionals become leaders instead of just remaining task managers. They have to rise to be leaders in the organization and gain confidence and emotional inroads into people that they are handling. What is the difference between being a manager and a leader? Can someone tell me? Anyone?
Come again, madam. Sorry.
Difference between being a manager and being a leader.
Okay. So see, a leader can provide the instructions in how to manage. It may not be vice versa. A manager may need to follow the instructions given to him, and leader will be have the responsibility to generate the instructions and take the responsibility for it. Manager may not take the responsibility for the instructions given to him by a leader.
Exactly. That is the right way to say, Sayam, because a leader has to have a short-term vision and a long-term vision, and on that basis of that vision, he can provide information, directions to his staff or to other people within his fold to work as a team. Whereas a manager is only going to follow those orders. He would not have the vision to to build strategy in terms of leading that company into a better situation. Am I right? Are we both right, Indu?
Yes, very correct on the technical part of it. On the soft skill part of it, a leader is someone who leads, does not have to be a manager. A manager is typically someone who gives tasks and gets deliverables. He doesn't normally become one with everyone. He's managing, he's not leading. So, leadership itself is something that becomes far, far more involved than a manager really needs to get. So, technically, you guys are right. Yes, that's very true. A leader doesn't always be a manager. A manager, if he's a leader, he absolutely is a hands down winner. That's the difference. When you have people who are managers, they don't get involved. Their emotional involvement is very limited, and we'll see what I mean by that. When they are leaders, they are emotionally involved. They get into the nitty gritties of leading their people. And that is a very key difference that today we don't find, even in very large corporates. We don't find leaders, we find managers. They're very good managers, please. Being managers is not a bad thing. Being managers is a very important thing. But to be able to manage well, you have to transcend into being a leader, not just a manager. So we have a few things to manage conflict by. Effective communication is one of them. Creating an environment of
Indu,
equality.
I just want to say something on communication. So, everyone, tell me, uh, have you ever had some sort of a fight with your friends or some group in your WhatsApp wherein someone writes something and then you immediately latch onto that message and reply back in a savage way, and the conflict starts? How many of you done that? Almost
One people
everyone
lash
should.
out on someone many times, lash out on
Yes.
someone many times, but control that urge. Otherwise, people will say you are not true to your name.
So Sayam, you're saying control your urge, but the main point that I'm trying to make is that the whatever is said or written, it's a communication, and
That's
if
right.
you do not communicate your perception to the other person in the same way that you are meaning it to be, your communication is faulty. Okay, most of the times I have seen that communication takes care of a lot of conflicts. One small example that I can give is that in 2014, there was a company which I was advising, and they they were into NPA, and at that point in time, the insolvency code had not come in, and the bank was ready to initiate SARFACI against them. It was in 2014, and the promoter of the company was not communicating with the bank at all. We started that communication. We went to the company, to the banks 2 times a week. we communicated with them. 3 months later, the bank started trusting the promoter, because we used to tell them that your money is safe. We will be starting, we are running the business, you're getting the money. So the trust factor was created by us. Once the trust factor was created, the bank started rolling money for the debtor. They started giving them small term loans, small cash credits, so that they could tide over this negative cash flow issues. And this took us almost 3 to 4 months to create that trust with the bank, through communication, by visiting them, talking to them, providing them with documents, and showing that we are transparent. So that is how, what communication effectiveness is. Yes, Indu, please go ahead.
And that's so true. When we do sessions on effective communication, the one of the largest tools today being used are emails. When people type out an email, they have a certain thought going on, and they type it out and send it out. And the person who's reading is like a blank slate. He's reading that communication from afresh, and he's either completely confused or gets the horse by the tail. The message that the sender sent was not clear. And so when we take sessions on effective communication, we make people write out the email. We will tell them to walk away from their desk, go take a cigarette break or a coffee break, or go get some fresh air, come back again and read what they wrote. And then 99% of the times, they will sit and rewrite it.
This is a
Because
tip, Indu. This is a tip for all participants. As lawyers, if I draft a petition or a complaint or an application, we will never ever file it before reading it 3 times in the next 2 days. If you've done it in the afternoon, come back tomorrow morning, read it. You will find that your perception about what you have yourself written is so bad that you need to change that into something else.
right.
Please do that, and you will see the difference between your communication earlier and now. Yes, please go ahead, Indu.
Yeah.
Sorry to disturb you every time, but
No, that's okay. My key gets stuck for some reason. What is okay? So now we're going to discuss, coming back to your point and yours, Rocky Sayam. Um, what are the key leadership skills for conflict management? And these are not just for conflict management, these leadership skills actually hold true throughout. When you're leading people, these leadership skills, you can make cheat sheets and keep them. They will always come in good use. They will always help you. The first and foremost thing that differentiates you from being a manager is your emotional intelligence, your investment into your people's emotions, because you are dealing, especially in a turnaround situation, you are dealing with high stress environment. Everybody is on a high stress level. Everybody is trying to battle a big monster in front of them. When you are empathetic, when you're sympathizing, and everybody has personal issues, everybody has psychological issues, everybody is dealing with demons of their own, and there is this big bad monster in the organization where they are earning their bread and butter. It's bound to be a emotionally high strung place. It's very important for the leader to dip into this emotional turmoil and try and settle that by being empathetic, relating to people. And what really makes this entire thing become very, very sublime is the diplomacy, tact, and emotional understanding that a leader can bring. If he can't bring this, he can never be a leader. A lot of people who I've seen through my career who are not emotional people, who cannot bring this emotional intelligence to the front, poor things struggle with it. They can't. And they never are trusted by everyone, no matter which designation they are at. They cannot lead. So emotional intelligence is one of the biggest players in creating bonds at any level between people in the organization, even between stakeholders, to be able to trust you, to empathize with your situation so that they can bring down their own situations to match your flow. Decision making, again, is something that people depend on big time. People who don't make decisions, no matter how good a manager they are, no matter how good a business person they are, will never gain people's trust or respect because they are not decision makers and they are not fast at it. You have to be far sighted, you have to be able to see what is good for the organization, you have to weigh the pros and cons before you're able to make the decision, but it can't take forever. So you really have to be someone who thinks that you're on your feet. You have to be someone who's quick in understanding the background, the foreground, and the situation itself to be able to make that quick decision, be completely transparent about it, yet you have to be so involved in that decision that you're actually rising above the occasion. It might be something to do with you, but you rise above it. You're ready to roll up your sleeves and say, okay, I'm getting on the floor, I need to step in because so and so is not working, I'll take care of that. I don't care about my designation and I am this fancy manager in a big nice cabin, I will go there and do stuff. That is the adaptability that makes you a leader. A manager is someone who will say, I want you to follow me now. A leader will say, okay, you don't want to do it, side hustle. Let me take care of it. They earn respect. And by doing that, they create a very conducive growth environment, an environment where people are willing to put their head on the line for the leader. People who are seeing you as a leader hold others' contribution, others' good things above your own. You're not there sitting and typing out how well I performed, but you're saying my team performed. Rocky did this, Sayam did that, Naresh did this, Satish did that, and therefore we've achieved this. That is a leader. Instead of saying, oh, my team did very well, we have achieved this, we have done that. So the total involvement of a leader and yet glorifying others, glorifying them, making them rise is something that is typical of leadership. And that will hold good not only in business turnaround situations, but through business management always, where you, amongst your resources, you are able to identify not one potential. Please understand, that's a manager's job, but to understand the potential of every one of your team members. One person might sing well, one person might dance well, the other person might play the mouth organ well. That's what creates the orchestra to be good. And if you can create that orchestra, you're a leader. And if you're a leader, conflict management comes naturally to you because you mitigate conflicts even before they happen. So you're able to understand the potential of each of your people. You're able to support, grow that potential. If somebody is good at accounting, you're growing that. If somebody is better at handling the floor staff, you're growing that. When you do that supporting of the correct potential, you have an increased leadership quality. You're making a leader of everyone around you. And when you do that, you're actually causing a winning game. You're actually creating an atmosphere of winning. Now, again, back to academics. There are two kinds of leaderships, transformational and transaction. There are several kinds of leaderships. But in business turnaround situations, any leader is supposed to kind of toggle between these two forms of leadership. Transformational is basically when you are inspiring and bringing about a change, and all turnaround professionals have to bring about a change. That is their work because something, as Rocky said, because there is something wrong. That is why there is a business stress situation. And to transform that is what these transformation professionals are coming in to do. They are managing that change, and you have to be able to inspire that change to happen and make sure it happens. A lot of people don't like change. The moment somebody's manager who he's comfortable with is replaced, insecurities grow. There is a fear tomorrow I will be replaced. There is that constant encouragement to change that has to be made. And that is something that every turnaround professional has to do. Transactional leadership, on the other hand, is again mostly managerial work with leadership qualities. So you're focused on your delivery, you're focused on a structured way of performing your duties, whatever your deliverables are, timelines, controlling the delivery parameters, making sure that there is that level of urgency there. The customer is waiting. You can't keep a customer waiting. The timelines are met. There are there are quality issues. Quality issues are taken care of. All these things are transactional leadership. Of course, here you are also dealing with all kinds of stakeholders, and within the organization, as a transactional leader, you have to make sure that there's harmony between all the stakeholders while your delivery is being taken care of properly. And when all these changes help the organization, you're actually handling the whole situation extremely well. So you're basically jumping between both of these forms to get the best out of not only your own situation, but the business situation that you're in. Again, I can't begin to stress enough about effective communication. There are oodles and oodles of things written about it between people. Every stakeholder is a person, and with every person comes a plethora of psychological situations, their mind, their emotions. The best way to handle all of that entire gamut of emotions and psychologies, is by being crystal clear in your communication. No need for floral words, no need for flowers to be brought in every day. What you need is effective communication to manage the expectations of each and every stakeholder, so that they are realistic, the deliverables are realistic, the goals are realistic, the key players are absolutely awarded, rewarded, appreciated for achieving those goals. And you can't do that if you are ambiguous at any point in time. If you need an alignment in your stakeholders for them to be able to align with each other properly, to understand each other's not only shortcomings and problems at that point in time, but looking forward also, how they're going to take themselves forward. This absolute clear expectations have to be there, because that is the perception creation that you are doing at that point, all your stakeholders. And perceptions, my friends, can play havoc. If communication is not effective, if you've said it's a blue sky and I think it's a light blue sky and you think it's a dark blue sky, and the third person says there are clouds in the sky, and the fourth person can't see the sky altogether, we have a problem with the picture. Yeah. So it's always good to be absolutely transparent, clear, make every word count. And what that does is actually reduces anxiety and resistance to change. It actually stops a lot of bad blood from happening. Amazing things happen when communications are clear, even on the legal front. You've always heard communication has to be absolutely clear. That's what happens even in a business turnaround situation. How do you make this communication effective? The first and foremost thing you do is listen well. And when you listen well, you listen without interrupting. Very few people you would have known have the ability to listen. And that is one of the most important things that are form the pillars of effective communication. Unless you listen, you don't know what the real problem is. You don't know what the underlying problems are. You don't know what the background is. You don't know how this person has dealt through his day to reach here today to tell you what he's telling you. So it's very important to listen, to pay attention, to ask questions wherever required. If you don't want to interrupt, write your questions down, but do not leave those questions away, because that is again bad communication. If you left your questions unanswered, you've not communicated well enough. And it's very important for this entire thing to play out when we are dealing with stakeholders and their concerns, their issues, not just on a daily basis, even on the larger issues. It might not be addressed by you, but you are the listener that brings it up to the authority that can deal with them. What are the techniques of effective communication? Of course, if you listen well, you've already killed a lot. You've taken care of opening up very effective communication channels, which is very important. Unless you listen and ask the right questions, the person in front does not get the confidence that you're worthy of listening, that you're worthy of solving his issue, that you are able to take care of the situation at hand. It has to be very, very clear that the communication channels are open, fair, not judgmental, and everything is being told very clearly. Deliverables are spelled out, timelines are spelled out, time and time again. You're told the same thing. You don't use new words every time with different meanings. You use the same words, whether it is about strategy, about delivery, about production, about processes, whatever it is. It is a standard, well spelled out, transparent communication that goes out. And this happens along with a constant flow of information that is going on a daily basis, on a periodic basis, and it has to be very positive. You can't be a leader if you're constantly pointing out the negatives. Yes, it is a business stress situation. Yes, there are resources that are very, very stretched at that point. Yes, you are in a situation where it's all about the money, honey. The money resources are being stretched. Every penny is being counted. Is that what you want to keep harping? No. You have to bring out a very positive and encouraging flow of information, of people performing well, of people overstepping their duties and doing things that they were not expected to do, but they did. That creates that flow of information that is inspiring, that makes people want to do more than they are just expected to do. And this flow of information has to be both ways. Please do not think that the information only as a leader I will give, or as a turnaround professional, it is my job only to give. The information coming down up is also equally important for you to get your processes, your systems, your guidelines sorted well, so that everybody who's impacted by them, every single stakeholder in this entire ecosystem, stands to be benefited. Otherwise, this flow of information gets stuck, and that's where misinformation comes in, and we set the big bad cycle rolling again. And the other part of this is to have a constant flow of feedback.
Uh, I-
And-
Indu, I just
Yeah,
just wanted to say something.
yeah.
Some years back, one of the presidents in United States gave out an executive order. That is, an executive order is a order given by the president, and that order said that anything that you write in to anyone, it was effectively for lawyers. You should write in a plain and a very simple language. And when someone asked the president, "What do you mean by a plain and a simple language?" Because again, this is not a clear, crisp, and precise definition of a simple language. The president replied that anything that your grandma can read and understand, that is a very plain and a simple language. So always write in a plain and a simple language. Do not become Shashi Tharoor of India, where where he can give you a word for which even probably the dictionary might not be helpful, right? So please write in a very plain and a simple language that would effectively convey all your thought to the other party in the same way that you are wanting to convey that. Yes, please go ahead, Indu.
Thanks. Yes, it's very, very important. You know, sometimes, and I have seen this in my career, that emails come down with words that maybe I will understand, but going down my pecking order, chances are the person down the pecking order will not understand. So do not even go into that. It's not a competition of how good your English is. It's about getting the message across crisp and clear. And that's very, very important. Otherwise, you're going to be handling a lot of problems that are unnecessary, could have been avoided. So your communication, and I can't keep stressing on it enough, is extremely important. You have to be clear about it. The next thing, again, and I said this right when we were discussing it, is in a stress situation, eliminate all manufactured conflict. Absolutely take it away, because what that does is in most manufactured conflicts, you're putting one group against the other. Here we want positive energy to flow in one direction. There will be people who will try and contradict. We want to not create more problems for the leadership, for the turnaround professionals. We want to smoothen things out so they can concentrate on being leaders in transformation and creating a positive atmosphere so that the business is turned around. The moment you get into the nitty-gritties of manufactured conflict, it creates a lot of other problems that you don't want to deal with. You could well do without them. So, Rocky, you were right then. When you are trying to deal with manufactured conflicts, it creates a lot of other issues. When you have stabilized to a certain extent that you can afford to get into manufactured conflicts, that is a better time to get into it. But when you're in the slush of the situation, try to avoid these. Just be as appreciative, as rewarding on anybody who achieves his goals or overachieves his goals. Try to be encouraging, try to be positive. Just leave out the conflict, the manufactured conflict part of it. What are the strategies to manage conflict? One of them is, we all know, we all do it in our everyday lives. Going back in history, we have done it always. We have panchayats to do it, is a collaborative problem solving technique where dialogue is absolutely essential for anyone with a situation that has blown out to become a conflict situation. But when we do that, we have to understand what is the underlying problem. Where is the real problem versus where is the apparent problem? And what is the backdrop to that problem? There are these three aspects of any situation that has created a conflict. The underlying problem might be extremely small in most cases and can be sorted if everybody sat together in the first instance and sorted it out. And most of the time, you'll see that if this underlying problem was addressed when it happened, there would be no conflict. But clearly, the underlying problem was there, was not communicated. Then there comes up layers of ego, layers of position, status, jealousy, hierarchy. There are layers and layers and layers till the ball becomes really big. And you can't see the backdrop to the original problem because the ball is so big that it's covered even the real problem. So if you want possible solutions spelled out explicitly, sit, talk, debate, manage the egos. Tell everyone this is not the place for being egotistical. This is about handling situations that is creating our business loss, that is creating our business to be in a stressed situation. And then you can arrive at a very win-win solution where, there's an understanding of what is actually happening, how it's happening, what are the situations that are being then manifested because of the conflict that is going on right now. So everything becomes very, very clear at that point. Rocky,
Yeah.
are you giving me a break in taking over?
Yes, yes. You need a break. So, mediation, a very new concept, not a new concept, but in India, the Mediation Act was enacted a couple of months back. In the morning, I was in a webinar where mediation was spoken about. All those things about communication that Indu has just spoken are actually a part of the mediation training program, which includes active listening, uh, to communications to be crisp, clear, and precise, to understanding people's psychology. All these things constitute a part of training process for a mediator. So, being an IP, you are into a mediator's role. Why? Because if there is a vendor who is into and who's having an issue with a corporate debtor, you try and sympathize with me or have some sort of a logic behind why his claim has been decreased to one third. Probably there were not proper invoices, so you need to tell him that the invoices have not been given or they are not correct. There is some issues with that. So you are trying to actually sort out an issue with a vendor or a financial creditor whenever you're taking claims in, or when you're talking with the COC, there are two creditors conflicting with each other. Then probably you will try and manage it. In our olden golden days, that there were panchayats, there were mm, people, say if you have an issue in any of our families for that matter. uh, so if, say, husband and wife are newly married, husband and wife are not are fighting with each other, what do? You call in the elders, try and sort out the matter with them. So that is what mediation is all about, sorting out matters by listening to both the parties and then coming up with a solution to that, wherein you can force that solution on those two people. So you need to separate all your emotions when you are mediating. And mediation in insolvency can also look at some sort of a deal mediation. So if there are two creditors who are not seeing eye to eye in terms of haircuts, say that the quantum of haircut is in dispute because of valuations. So it would be your prerogative and the duty to settle that dispute somehow or the other by getting in proper valid legal valuations, so that they can understand that this is the amount of money that they can recover and this is the amount of haircut that they can get. So underlying problems need to be addressed in this way. Whatever the perception of the conflicting parties is, you have to sort them out, and that could be one of the tools that which will be coming into insolvency. Can we go back to the initial stage? Yeah. The tool which would be coming into the insolvency and the bankruptcy ecosystem is mediation. The regulators are working on that, looking out framing of rules. But again, who can be mediators, whether it would be a co-mediation or no. So managing conflict in insolvency, it is the leadership, the RPs, the liquidators who should take the lead in settling the disputes. If a dispute is not the disputants are not ready to settle the disputes, then the court is the way. But preferably try and settle the disputes before going to the court. Yeah, yeah. Next slide, ma'am. Now, what is turnaround? What is turnaround? Can anybody tell me what is turnaround as compared to insolvency?
A turnaround as compared to insolvency
Yeah.
in view of the insolvency.
No, no.
The-
As compared to insolvency.
In a normal business scenario?
In a normal business scenario, yes.
Okay. So basically, it could be putting the company back on its feet. That is the primary purpose of IBC also. But the question of turnaround can arise when a company is facing financial stress or a business stress,
Yes.
or the company intends to venture into a new technology or a new field. For
Yes.
example, a conventional technology company looking for the opportunities in an artificial intelligence field.
Yes.
That
So
may also be a turnaround.
what you are talking about is, when we talk about turnarounds, it is more of a preventive mechanism, whereas IBC is a curative mechanism. The company has already got into a default, and some sort of a curative measure need to be taken to bring it back on track, right? Whereas in a turnaround situation, when we talk about turnarounds, the preferable time of a turnaround is from the time the company first gets into a state of insolvency till the time it is prior to liquidation. There could be a turnaround of a company. So effectively, we prefer that turnaround is a preventive mechanism rather than a curative mechanism. And so should be what so should be the conflict management part of it. Before a conflict spirals out of your control, you need to manage it, and again, ASAP. That is the key word here. As soon as you come to know about it, try and settle that whatever conflict is there, because uh, if it is spiraling out of control, it could lead to the death of a company, because the egos, the psychological factors, the emotional factors would destroy the company. Everybody, you have seen films on it. We have seen actual live situations that have happened because of egos and psychological effects of different sort of emotions on people. So, when you are a leader, you need to see that you take care of the conflicts. You do not have any sort of a favorite person to whom you can rely upon to give a decision. You have to take the decision yourself. Plus, you should not do favoritism to any other stakeholder. Just say he's my friend and he's a vendor, so probably I'll give him a better haircut than the others. Can't happen legally, and can't happen as per law. Most of the times when you see in when the IBBI takes some sort of a measure against an IP, there is some sort of favoritism that is involved. Transparency, law, and core function, that is a given. You need to be a leader to do that. If you're not a leader, cannot take responsibility for your actions, cannot think and start developing a strategy for doing things, of whatever you're doing, either a turnaround or an insolvency process, you cannot succeed without the leadership qualities. Then you also need to have proper communication and networking with stakeholders. As a lawyer, I can talk as a lawyer because I am a lawyer. Probably chartered accountant and company secretaries also think that way. So when we are getting into a situation, you go and, in your mind you develop a matrix where you would see that what could be the worst case scenario and what could be the best case scenario. And that is exactly what is the need of the hour, that you need to understand that if this happens, this could happen, go out of manageable limits. So you need to mitigate all those possible conflicting situations before they escalate into a major issue. And this can be done by open discussions. Let people perceive you as a transparent person, as a trustworthy person, where they can come and tell you everything. In that situation, the conflict can be managed very easily, because you will have that all that information that is required to see that the conflict doesn't escalate into something bad thing. Yeah, next slide, Indu. Okay. When we talk about insolvency, what sort of uh, the insolvency law has evolved over the years, last 500 years. That law is about Indu, we have ended the the presentation.
I
You have
am
to
trying to work these. Sorry, I'm trying to work these. They're not helping me at all. There
okay,
you are.
hold it here.
Yeah.
Right. So insolvency is a collective action of all the stakeholders like creditors, right? They cannot file individual suits or cases in the court of law when an insolvency is admitted, a company is admitted into insolvency. Once that is done, what is the basic duty of a IP and the other stakeholders? There should be a commonality of interest, that they should be working towards revival of the companies. What does the preamble of IBC say? It says four things. Number one, if you go and read the preamble, reorganization. The second thing it talks about it is in a time bound manner. The third thing that it talks about is the maximization of value of assets. And the fourth thing is the balancing of the interest of the stakeholders. So when we talk about the balancing of the interest of stakeholders, there has to be a common factor where you will define what is the common factor for all the stakeholders. So everybody should be in sync with each other for whatever valuation that CD can bring in. But then again, if the mentality or the psychology of a stakeholder is for recovery, this will not work. The company is going to die in liquidation if there is going to be recovery. So reorganization is very important. Moreover, when you do talk about reorganization or restructuring, or you can call it by many names, revival, rehabilitation, or whatever, you're talking about a going concern, and a going concern will always have much better value for all the stakeholders than a liquidated company. Uh, all these whatever is written here is the gist of what I have just said. The IPs in turnaround situation are tantamount to success of any turnaround plan because you are the leaders here. If you do your job properly, you would find most of the time you will find success. You cannot turn around a company or a business which is not viable or feasible to run. The Moreover, you need to, as a leader, you need to inspire environment where everybody has and looks at the commonality of interest for the business and for themselves as well. And like I've said, maximization of value. I mean, okay. So this is what I have been speaking in the first instance. Next slide, Indu. Can't hear you.
There.
All professionals, be it lawyers, chartered accountant, company secretaries, and all individuals, all stakeholders, need to develop their problem solving skills. In 2 minutes, I'll take a small session on problem solving. What they say is that if you can define a problem properly, and when I say properly, if you can write 3-4 sentences on what your problem is, and that sentence tells you actually the problem, you would have solved almost 70% of your problem if you can define your problem properly. Because once you define your problem properly, you can understand the underlying causes which is creating that problem, and then you can easily find out what the solution is. So very importantly, handle perceptions with care, because if you are not sure what is written and what you are perceiving, go for a I mean, you can ask the person who has sent you that communication to please define again or say again what he actually needs to do or what he is saying. You can even talk to him. I normally pick up the phone and call up anyone. If someone has sent me a message, I will call up and ask him, did you mean this or that? So that is a very clarity comes into my mind that what is required of me. You need to manage expectations of stakeholders, yes, but then those expectations can only be matched once you know what their expectations are, and only then you can see what you can do. I mean, the last point of keeping the communication open and positive is always the right thing to do, because shutting down on communication is shutting down your life with that specific person, because because you will not know what that person is thinking or doing, and you're doing whatever you are doing and whatever doing your duty as such would not help out that person or the business or the company that you're trying to revive. I think we have 3 more minutes, Indu, for question and answers.
Sure.
We can take questions now.
I don't have any particular question, but that thank you very much for a extensive and
TMA India would be having these 3 hour programs initially. Sometimes in next month and couple of months, we'll be having certain programs wherein we'll be taking some case studies and they will be providing you with skill sets. So probably the next skill set would be on lean management by Abhishek. Abhishek is here. Can you open up your video, Abhishek, if you are there? Abhishek, if you're there, please open up your video. Anyway, I think he's not there. Anyway, so please tune in to whenever TMA has presentation of this sort, because this is going to be very helpful, and always looking forward to seeing you again. Thank you.
Thank you, sir.
Thank you very much, sir. Thank you, Indu ma'am. Thank you,
Thank
Ashish
you.
sir, and Satish sir, for such an interactive and knowledgeable session. Sir, you are requested to kindly share all the PPTs with us so that we can forward it to
Anjali, these
IC.
PPTs are proprietary information for us. We will not be able to share them. If any person has some question, they can write to us through. You can provide them with our phone numbers or email IDs. We will definitely answer to them.